On Uno Minda, we have Sunil Bohra, the Group CFO of the company, who joins us on the show. Hi, Sunil. Good morning. Good to have you as always. Before we get to your numbers, let's talk about the crucial issues. Trump's tariffs, how are they impacting business? Have you got some feedback from customers? I think 11% of your total mix comes in from international market. How much of it is from the United States? And have you received feedback from your customers?
Absolutely. So in terms of the exposure to US of our total revenues, it is less than 2% as we speak. So definitely it's not a significant quantum if we look at the top line perspective. And also you asked in terms of customer feedback. So definitely customers so far have been very positive in terms of the total revenues. In fact, our sales in the last quarter has actually been better than what they were. And we are all, I think, in the wait and watch mode as to how things will eventually pan out, because the businesses cycle we are in, it is, auto industry is something where when you have to get into a business, it's a long cycle. And I'm sure it's the same time when you have to sort of replace your suppliers. So it's not something which you can switch on and switch off overnight, because there's a long time to develop the product and then get into a new model launch, and then you are part of that entire life cycle. So from that perspective, I think from auto perspective, specifically from tier one perspective, uh, it's very difficult to say what will be the immediate impact. As I said, it's a long.
Yeah, but Sunil, having said that, can you just tell us right now, exports as a percentage of your total top line annual revenue, what would that number be?
Yeah, so that's what you just said. It is roughly around 11%, and when you say
11%.
It is export plus our international revenues. So we have some assembly operations or manufacturing operations outside of India. So as an overall pie, it is roughly around 11% of our.
11%, got it. So now, given that there are, big shifts happening, supply chains seem to be realigning because, and for us, maybe there's still a negotiation on, and we'll see if we settle at 25% tariff. But it seems that 15% between the EU and US, etc., those things seem to be fairly settled. And the ASEAN tariffs, they seem to have settled. There's no further negotiation there. So because of all of this, can you give us some more perspective on what you're expecting from your overall international business, exports plus international? Are you getting more inquiries? Will you have to make any kind of shifts in terms of, the areas you're manufacturing at?
No, absolutely. Actually, our exports are actually doing, if you see in absolute terms, doing much better than what they were on a year-to-year or quarter-to-quarter basis. In fact, at ASEAN, if you remember, last year we commissioned a new plant in Vietnam. As we speak, there is a new plant under construction in Indonesia. So our ASEAN business is actually doing pretty well. Europe business is stable. And there are some exports which are happening from India is to Europe, ASEAN, and to US. And as I said, US is definitely it's a very small number, and there is not much of export from other geographies to US. So from that perspective, we are quite insulated.
It's not a big impact, 2%, but you still don't want to lose 2% also, right, Sunil, of your overall revenue?
That's what I said. So as I said, as of now, our numbers are actually looking better than what they were. And when you see auto tier one, it is not something which I'm maybe repeating, switch on, switch off to one supplier to other supplier. It's a long cycle. So even if the customers, for a moment, if we think has to maybe look for some other source, it's a long cycle. And things are volatile.
Assuming you have the order, Sunil, there could be some margin pressure. It's ultimately a very large tariff burden to be shared by one entity. To be taken up by one entity, it will have to be shared. So in that context, do you see any kind of margin pressure? Because your reported margins, ex-incentive, was also about 10.7%, not close to the 12% that you reported.
Yeah. So as I said, it's little early to comment on the cost pressures. Our numbers are actually better. And to whatever indications we have, our customers as of now have not even sort of came up and said, how can we sort of share this? So because I think they are also in the process of digesting the impact and how this can be sort of panned forward. And they will, I'm sure, also look at other options. So it is not that only India is impacted. There are other geographies also. There is a tariff. Yes, there might be a differential, which we all know will kick in from 27th of August. But still, I think there is some optimism that something might come out of this discussion.
Okay. What is your content per vehicle for ICE? Last time it was 12,000. What is the number in Q1?
No, for ICE, if you are referring to a PV or a two-wheeler.
Two-wheeler.
So two-wheeler is ICE content is same. We have not added any significant number. So we disclose the numbers on annual basis. So the number which we declared in the last quarter remains the same.
Got it.
Let's talk overall growth and margins as well, Sunil. So in the first quarter, you've done about 16% consolidated top-line growth. Margin is at about 10.7%. What's the outlook in terms of how pricing is moving in the domestic market and, of course, raw material and costs, etc.? What can you tell us about the future of margins for the rest of the year?
Yeah, absolutely. So as we have guided, our annual margin range guidance is roughly 11% plus minus 50 basis points. And we are within that guidance range on an annual basis. So quarter to quarter is very difficult to comment on. That's why we give a annual margin, because normally whatever price discussions, etc., are happening with the customers, normally they get close towards Q3 and Q4. And that's where if we see our trend for many years, normally Q3, Q4 tend to be a little better than Q1, Q2. And that's why on an annualized basis, it is 11% plus minus 50 basis points. In terms of cost pressures, as you know that large part of our commodity businesses, commodity cost is actually passed through to our customers. It's upcycle also is shared with the customers, and even downcycle we don't stand to gain anything. So from that perspective, we have tried to insulate the business as much as possible from the commodity price volatility.
And what can you tell us about revenue visibility, considering you're saying, I mean, your international business is absolutely not impacted by what's going on. So that's pretty steady. What about the growth in the India business? So total top line visibility, can you share some sort of a guidance for us for the full year?
Yeah, so absolutely. As you would have seen in past also, we have been very clear. We never give a headline number in terms of revenue, because we are completely dependent on our customers. So we have been consistently saying whatever market grows, we grow at least 1.5 times of the market growth. And if you see even the last quarter, the large part of the business, which is our 92% of the business from two-wheeler and passenger car segment, which has grown 3% and 1%. On average, 2% is the industry volume growth, whereas our growth, as you just said, is roughly around 16%. So that clearly demonstrates the outperformance. And if you plot that for past many quarters, many years, I think we've been consistently outperforming the industry growth, and we're quite optimistic we should be able to continue that in the near future as well.
Okay, all right, Sunil, we'll leave it on that note. Thank you for joining in today. Good luck for the rest of the year, and we look forward to more conversations in the future.